Remember, please hit like and subscribe for me. Thank you so much. Okay, let's go.
Hi, everyone. Today is Monday, July the 28th. We have got one of the most action-packed weeks of releases and earnings events that we probably have had all summer. And as a result, volatility for Monday is higher across all the board. We do also see increased volatility for Wednesday, expanding, and we do know that we've got an FOMC formation. We've got them coming out there as well. All right, let's start. My name is Anne-Marie Band, and this is the Moneyball Morning Report for the Benzinga Pro platform. We are looking at the ES. Currently, it is sitting at call resistance from Mentor Q, and so that's pretty important for us to consider. Implied vol for Monday actually sits down at 6,428 approximately at this time. The opening range, we did gap up. As you may know, we've had an EU deal and they have kicked the can down the street for China. A lot of things still up in the air. But this gap up was from the EU news. What do we expect? A gap fill event would be ideal for a long formation to see if we can hold it. My thought is this area of heavy congestion, these 1, 2, 3, 4, 5 hours, old resistance, new support, that's where I'm setting up my newest long event for the ES. I'm going to have to wait on that, obviously, and hopefully it comes in the near term. But that, I suspect, is a really nice area to watch for a bounce zone. Upper edges, top of the range, 6,473. Opening range formation, high 6,455, low 6,442. So we'll see how that goes. Could it be that it holds the call wall here? Yes, indeed. And you could trade that. We just had some news come out. Not doing very much to anything, but I would like to wait until it comes closer to this 5-hour formation that we ended the day on Friday, which is around 64.21. That's where I am positioning for the long action event. Bounces into the opening range formation could give me a topping. So I might be able to get a short at around 64.55, something like that. I'll be watching that as well. We could have ourselves an ugly megaphone pattern today where we break high, we break lower, we break higher, and then we break lower. So feels a little megaphony to me. At the end, dips are buy zones, and let's use the dreaded trend line, which I positively hate. Not very good. I'm only adding 2 points to it. If I try to get more points from the range, looks like it could head a fair bit lower if I try to connect as many as these peaks. But I hate trading with trend lines. You guys know that. Let's take a look at the NQ. NQ sitting right in the middle of a big pocket. Notice how wide the volatility bands are for Monday. We're seeing that quite a bit. Opening range formation, high 23,558.25, low 23,504. They are battling at the bottom of this zone, but it's got a lot of negative pressure to the downside. Yes, it is by the dip. If I use, some of these here, this is very terrible because there are really no clean lines sitting here. It could be anywhere. So another reason I hate trading with trend lines. They're just the worst. But you can see that this 5-hour formation where inventory has accumulated, I'd like to look for the bottom of it. That also happens to be right there at Monday's volatility event. That's very interesting. Script timed out. Let's do that again and see if Mentor Q opens up. Aha! The call wall is right at the top of that heavy congestion. I would not be surprised to test that area. Bounces give us a pretty nice sell zone, right? So we want to look for the failed move to the upside here and a pullback. But again, a lot of volatility. We've got a lot of tech earnings coming. So I would wait for this price action here, 23,417. And the value area high is all the way down at 23,357. It could be a pretty wild day. So far, it looks very noisy, and we are building the beginning of what looks like a megaphone pattern. Could you take a long at the opening range low? Absolutely. What would your stop be? 23,480. So that's about 25 points of risk. Old resistance holding up as new support. You could try it. You definitely could try it. Ugly. YM. These gamma lines are always so weird here. All right, so we don't really have too much of whatever going on in here. Sideways action, these guys have filled the gap. They've come back into the base of the opening range at 45,070 and have now begun to bounce off of it. 45,010 to 45,137 is the zone. But if these guys already filled the gap, it could be that they're coming into the opening range of Friday and the point of control, which would also make a very nice long 44,925. Or if we break out of the top of the value area high, 45,137, we are well below the low of the opening range candlestick formation. We did break above the high just for a moment and then collapsed. So these guys really all over the place, but they have filled the gap. If it does come down here again to 45,070, you could try a long. Just realize that the risk event puts you right in the middle of all of this noise. My thought is, let's see if it can come back and collapse. Let's see if we have enough volatility in the chains to push us to the north, or we get back into the gap and we retrace from about 45,140 into 45,213 and 45,295. Let's look at micro Bitcoin. This one has been sitting here all day. As you know, I did take a long here. I have left it in my longer term accounts. I did not love seeing this collapse here, but I did hold the zone, and the double bottom kept me in the trade long. So now we are looking for the traders to resolve above this range. What we are doing is sitting. We tested the middle just about of the opening range formation of Friday, and that mid zone looks like the value area high, 19,649. It came into Tuesday's implied vol and then rejected. This is a very wide opening range formation. High 121,260, low 120,050. What are we seeing? We want to see the traders get back inside of this opening range. So what do you want to do? Well, you really want them to get in there, pull back, and give you something that looks like a jagged formation that begins to hold pressure at 119,950. Right now it's sitting at the call wall, and so it could easily fill the gap. There's negative pressure. We're making lower highs and lower lows. We failed to get to the top of the band. All of that represents a fair bit of weakness. It could be that we're going to dance our way all the way back to the volume point of control, which is a very noisy patch. I prefer to look at the 118,164 zone to see if it can hold up. It really does need to break out here. Otherwise, I suspect we head back down into the range. If I see the failure to recover 119,900 after it's tested this area, I'm just going to cover whatever I have left long. Okay? I don't love any of the chart formations that I'm seeing today. Really, none of them. Let's make sure that I have the right formation for oil here. Please look at your calendars. It is going to matter because of the noise coming from the charts in terms of news. All right, so what have we got here? Looks a little bit like it's going to come right into the resistance edges. Notice I only have Thursday and Friday's volatility formations marked here because I think price action is going to be so messy this week. Right? We are literally walking through the different formations. We've had a lot of days. Look at how many days we've been sitting in here. We just broke to the top. Last time we did that, we had a double topping formation and it fell. I'm thinking we have the same thing, right? I'm thinking we have the same thing. We've got low volume in here, popping up into the range. Opening range high, $65.35, low $65.05. So a 30-point range that broke out, and look at how breakout looks for positive events. So legitimately, you could look here during the night and say, all right, I'm going to bed. I broke out of this top edge, so because my momentum is up, I'm going to go long. I'm sitting in a range. This area at 66.50 is where you should take some profit. Very easily. It's coming into old resistance. Everything there told us that there were sellers there. So it is a place to take some profit. Could it break to the north? Yes, but we're watching for that. And you want to take as your gains what's expected, not what's desired, right? We'd love for it to go to 69 straight up if we're long, right? Watch for sellers to come back into the range in oil at around 66.75 to 67. Let's take a look at gold. Gold, man, gold is in rough shape. So take a look at this formation, right? I only have Thursdays and Fridays vol, just a little bit easier for us to manage through the week to see if we are heading into one direction versus another. We are losing the put wall, right? This is a put wall that traders really want to get up and over. My thought is the following. This gamma line here shows the second most important place that the traders have bought over this entire cycle. Might not be a bad idea to put a long at that 3,315, but it better get back up over 3,329 or this is not a good trade. Notice the price action continues to trend downward, right? Here's the only fly in the ointment about continuing to go short. In the overnight, we have not broken the low of the opening range candlestick formation, right? We haven't. And if we press down into here, my thought is, they might come down and test that again. So if you're looking for 3,315, I would not put a limit order out there. I would wait, let it come in, stabilize, look at your 15-minute candlestick, see what's going on, because that is a fair bit of pressure that's coming off of these candlestick formations. All right. Did we talk about the opening range high? No, high 3,334.6, low 3,303. So my thought is if they're trying to bottom around this 3,300, they're going to come all the way into that round number and shake the tree a little bit and then see if they can go long. Traders obviously are thinking about dollar weakness, and in the end, this pullback formation does really look like it's an area that traders could be buying. Notice, it stops dead right there. It's very, very interesting. Value area low on the 4-hour chart. Still making higher lows except for this break. And now it's trying to hold this low action here. But that's very, very sticky. I expect that a fade could be entirely likely. We did talk about this break, right? And it did the same. It did exactly the same that I thought it would, right? I said, hey, listen, we've got ourselves a break, a wedge that could potentially break. Your job, however, is to see what happens after the break if it holds the ledge or if it collapses. Looks like it's trying to hold the ledge here, but again, I like the 3,300 as a long. Lastly, let's take a look at SPY. SPY on the daily gapped up, fading a little bit. A lot of vol packed in this chart. I mean, a lot. But look at trend. Monstrous here. Sideways formation for, look at how many days this thing coiled. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days before it broke. Let's clone that to see if we have a one-to-one. The one-to-one looks like about the top of Friday's candlestick. That's interesting. So I would expect that it would try to fill the gap. Come right into 637. Yeah, 637.50, and then you've got yourself a trade. So potentially, I would say, hey, not a bad idea to try the long here, but if it slips at all, you're going to have yourself a fair bit of risk because of these wicks. And so you want to be careful about those wicks. They're going to be important. They're going to be important. All right. Hey, listen. Top end of the range. They're rejecting the call resistance wall. The next line in the sand is $635. We could fade all the way there. I have no idea what the charts are going to do. The vol is really spiked all the way around. I wouldn't mind looking at a topping formation here, but we shall see. All right, listen. Stay alert, stay present, and watch those charts carefully. Manage your risk. Take care, everybody. See you on the streams.